Let me start with a simple, important question. When you wake up tomorrow and look at your bank account, will you immediately understand what you're seeing? Or will you feel that quiet pause of uncertainty, wondering if the number in front of you is right, wrong, or something you should be worried about? It's that moment of hesitation that so many seniors experience, that split second where you see a figure and your mind starts racing. Is this correct? Did they make a mistake? Am I supposed to call someone? Did I miss something important? Should I be concerned? Tomorrow morning, millions of bank accounts across America will receive Social Security deposits. For some people, those deposits may be as high as $2,400. And if you rely on Social Security, what you don't understand about this payment cycle can quietly affect your financial confidence, not just today, but over the coming months and even years. Because here's what happens when we don't fully understand our benefits. We second-guess ourselves. We compare our situation to our neighbors and feel like we did something wrong. We see headlines that don't quite match our reality and wonder if we're missing out. We lose sleep over numbers that might be perfectly normal for our specific circumstances. For many years now, the focus has been on helping American seniors make sense of moments exactly like this. Moments when money arrives, headlines start flying, neighbors start talking, and suddenly something that should feel reassuring starts to feel confusing. The goal has always been very simple: to slow things down, remove the noise, and help you clearly understand what's happening with your benefits without fear, without hype, and without complicated language that makes you feel like you need a law degree just to understand your own income. So, let's take a calm breath together and walk through this carefully, step by step, in plain language that respects your intelligence, while honoring the fact that Social Security's rules can be genuinely complex. First, I want to say something reassuring right away. Not everyone will see a deposit close to $2,400, and if you don't, that does not mean something is wrong. It does not mean you were skipped, and it does not mean you're missing out on something you were supposed to receive. This is crucial to understand because the internet and social media can create so much anxiety around these figures. Someone posts that they got $2,400, and suddenly thousands of people are wondering why their deposit was different. But here's the truth. That figure, that possible $2,400, is not a bonus check. It is not a special giveaway, and it is not a guaranteed amount for everyone. It represents a possible combination of benefits that can vary widely depending on your own situation, your work history, the age you claimed benefits, whether you receive more than one type of support, and whether adjustments or corrections were applied during this payment cycle. Think of Social Security like a personalized calculation, not a universal payment. Your benefit is as unique as your fingerprint because it's based on your specific lifetime of work, your specific claiming decisions, and your specific circumstances. Social Security is not random. It feels that way sometimes, especially when you're trying to make sense of different amounts or confusing timing, but it's not. It runs on a structured system, one that's built around rules that apply differently to different people based on very specific criteria. And when you don't know which rules apply to you, confusion can easily take over. One of the biggest misunderstandings happens around timing. Many people assume Social Security pays everyone at the same time. It does not. This assumption causes more confusion than almost anything else, because when your neighbor gets their payment on Wednesday and you don't get yours until the following week, it's natural to wonder if something went wrong. Payments are released in waves on a schedule that has been in place for many years. It's not arbitrary. For most retirees, your payment day depends on your birth date. This is how the system organizes millions of payments each month. If you were born between the 1st and the 10th of the month, your payment usually arrives on the 2nd Wednesday. If your birthday falls between the 11th and the 20th, your payment typically comes on the 3rd Wednesday. And if you were born between the 21st and the 31st, your deposit is scheduled for the 4th Wednesday. There is also a separate group of people who began receiving benefits before May of 1997. Those individuals are paid on the third of the month regardless of their birthday. This is often called the legacy schedule. So when you hear that deposits are arriving tomorrow, that does not automatically mean yours is arriving tomorrow. It simply means one of those scheduled payment waves is moving through the system. Someone else's payment day may not be your payment day, and that's perfectly normal. It's not a mistake. It's not a delay. It's just how the calendar works for your specific birth date. Understanding your own place on the calendar can remove a tremendous amount of stress. I often encourage seniors to write their payment week down somewhere simple. When you know your week, you don't have to guess. You don't have to refresh your bank account every morning wondering if today is the day. This simple act of knowing your schedule can transform anxiety into confidence. Now, let's talk about amounts because this is where emotions really come into play. This is where people start comparing themselves to others and feeling like they somehow ended up with less than they deserved. Social Security is not a one-size-fits-all payment. It never has been, and it was never designed to be. Two people can live on the same street, retire at similar ages, work for the same number of years, and still receive very different benefit amounts. And that's not a flaw in the system. That's the system working exactly as it was designed. Your payment is based on decades of earnings, not just your job title or how hard you worked, but specifically how much you earned in wages that were subject to Social Security taxes and for how long you earned at those levels. The age you claimed benefits also matters enormously. Some people claimed at 62 because they needed income right away. Others were able to wait until their full retirement age, which for most people today is somewhere between 66 and 67. And some people delayed even further, waiting until 70 to maximize their monthly payment through delayed retirement credits. Some people also see higher deposits because of cost of living adjustments layered on over many years. If you've been receiving benefits for a long time, you've received multiple COLA increases that compound over time. Someone who just started receiving benefits this year won't have those accumulated increases yet. Others may be receiving corrections if Social Security identified an error in past calculations. So if you see a deposit that looks larger than usual, it does not automatically mean something is wrong. Very often, it means the system is catching up to what you were already entitled to, paying you money that should have been yours all along. At the same time, seeing a smaller amount than someone else does not mean you failed or made a mistake. Your benefit reflects your personal journey with all its unique challenges and circumstances. Another source of confusion comes from people who receive more than one type of benefit. Some seniors receive Social Security retirement benefits and also qualify for Supplemental Security Income, often called SSI. These are two entirely different programs. SSI payments usually arrive at the beginning of the month on the 1st. But when the 1st of the month falls on a weekend or holiday, those payments are shifted earlier. In some months, this timing creates a situation where your SSI payment and your Social Security payment arrive much closer together than usual or even on the same day. When that happens, it can look like one large deposit instead of two separate payments. Most of the time, it's simply the calendar doing what it always does. Now, let's talk about something that surprises many people and creates genuine confusion when they see their actual deposit amount: taxes and Medicare deductions. Many seniors grew up believing Social Security was never taxable. For decades, that was true. But the rules changed in the 1980s, and depending on your total income, a portion of your Social Security benefit may be included as taxable income when you file your return. Let me be clear about how taxation works, because this is widely misunderstood. When people hear that up to 85% of Social Security can be taxable, they sometimes think that means 85% of their check is being taken away. That is not what it means. It means that up to 85% of your benefit may be counted toward your taxable income and then taxed at your applicable tax rate. Then there is Medicare. Most people who are 65 or older have their Medicare Part B premiums automatically deducted from their Social Security before the money ever reaches their bank account. The standard Part B premium changes every year, but some individuals pay more based on their income from 2 years prior. This is called the Income-Related Monthly Adjustment Amount, or IRMAA, and it can significantly increase your Medicare costs. In some cases, premiums can increase temporarily if your income was higher in a previous year, even if your current income has dropped significantly due to retirement. This can make your deposit look smaller, even though your actual Social Security benefit amount did not change. The good news is that you can request that Medicare review your IRMAA determination and potentially adjust your premiums downward. There are also special rules that affect people who worked in jobs that did not pay into Social Security. If someone receives a pension from that type of work and also qualifies for Social Security based on other employment, their Social Security benefit may be reduced under formulas known as the windfall elimination provision or the government pension offset. This can come as a genuine shock if no one explained it ahead of time. It is not a punishment or a mistake. It is how the system attempts to balance different sources of retirement income. Another question heard often is about working while receiving Social Security benefits. Yes, you absolutely can work while receiving benefits, but if you are below full retirement age and earn more than certain annual limits, Social Security may temporarily withhold part of your benefit. This withholding creates tremendous anxiety. Many people think this money is lost forever. What is rarely explained clearly is that this money is not lost. It's a timing adjustment. Once you reach full retirement age, your benefit is recalculated to account for those withheld months, and your monthly payment increases permanently to make up for the months when benefits were reduced. Sometimes seniors open their bank account and see a deposit that feels completely unexpected, larger than normal, out of the blue with no explanation that immediately makes sense. And the immediate fear is that it was a mistake. In many cases, these unexpected larger deposits are actually adjustments or back payments. Over the years, errors can happen in Social Security's records. When those issues are identified and corrected, Social Security sends you the difference. That money was already yours. It was always owed to you. This is why it's genuinely helpful to review your Social Security earnings record from time to time, even before you retire. Now let's talk about how your money actually arrives, because even this basic mechanism can be a source of stress if you're not familiar with how it works. Today, the vast majority of people receive their benefits through direct deposit. It is faster, safer, and far more reliable than paper checks. For those still receiving paper checks, I would genuinely encourage you to consider switching to direct deposit if it's at all possible. The reduction in stress and the increase in predictability are worth the small effort it takes to make the change. If you ever receive a notice that doesn't feel right, or a deposit that doesn't make sense, or a letter explaining a decision that seems incorrect, remember this: you have rights. You are not powerless in this system. You can ask for explanations, you can request reviews, you can appeal decisions if you believe they're wrong, keep copies of letters, take notes during phone calls, document everything. If you need help understanding the information, ask for it. You are not bothering anyone by asking questions about your own income. This is your money. You worked for it. You paid into the system for decades. And finally, I want to step back from all the rules and technicalities for just a moment and speak to something deeper. These payments, whether they arrive as $1,200, $1,800, $2,400, or somewhere in between, represent decades of work. Early mornings when you didn't want to get out of bed, but did anyway. Long days when you were exhausted but kept going. Years of contribution to your family, your community, your country. When that money arrives in your account, it is not charity. It is not a handout. It is earned. It is yours. Understanding how it works is about peace of mind. It's about financial confidence. It's about being able to look at your bank account and understand exactly what you're seeing without fear, confusion, or anxiety. When you understand your benefits, when you know your payment schedule, when you can explain to yourself why your amount is what it is, something shifts. You don't panic at headlines. You don't compare yourself to your neighbors. You feel informed, grounded, steady. And that feeling is worth more than any dollar amount because it allows you to plan, to live confidently, and to enjoy the retirement you worked so hard to reach. As deposits arrive tomorrow and in the days ahead, I want you to remember this. Clarity brings calm, and calm allows you to plan thoughtfully, live confidently, and make decisions from a place of understanding rather than fear. You are not alone in this. Confusion is normal. The system is complex and you're not supposed to know everything automatically. Curiosity is healthy. Asking questions is smart. And taking time to understand your income is one of the strongest financial habits you can possibly build, especially during retirement when that income becomes so critical to your daily life. Take a breath. Be patient with yourself. Be kind to yourself. And remember that your understanding matters just as much as the number in your bank account. Maybe even more. Because when you understand what you're looking at, you're no longer at the mercy of rumors, headlines, or other people's experiences. You're empowered by your own knowledge. And that's a gift you give yourself that no deposit amount can match. Take care of yourself. You've earned every bit of peace and security that comes your way.